Good morning, traders. It's 8:02 a.m. Chicago time on the Tuesday of March 7th, 2017. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is another trader bite. Again, this is simply a method for some folks to use to, or at least an over-the-shoulder look at market prep. The biggest thing I want to instill, again, I repeat this on a weekly basis as much as I can remember. I'm getting old, I guess, and I don't remember sometimes, but the goal here is to provide some form of structure to show you that no matter what you're doing, even as a professional, you have to come in with some sort of anticipation of what the market is potentially going to do. Whether it does it or not, it doesn't matter. The goal here is not to be right or wrong. The goal here is to have a plan in place and to respond based on that plan once the market actually shows you its hand. In trading, our goal is always to narrow things down so that execution is believe it or not, is as thoughtless as possible, in my opinion. You don't want to do a lot of assessing and thinking and analyzing while you're executing. Think of yourself as a fighter pilot. Um, a fighter pilot, when they get into a dogfight or executing a mission, they're not searching through maps. They're not reading manuals. They're not looking for parameters to trade off of. They're simply executing something that they have practiced and have planned for and have played out in their mind multiple times. This is where you need to get. This is where performance is best. Same thing goes to athletes. You don't think about the play while you're in the game. You practice the play outside of the game. You study it. You have a game plan, and then when the conditions reveal themselves, then you're just executing the play thoughtlessly. Okay, and so it's important to take this trader bite into context and understand that my goal here is not to give you my trading plan. My goal here is to show you a method of approaching the market. There are millions of methods, but I'm using certain products, certain tools and parameters, and I'm sharing those with you. I've been doing so for 3 years openly, completely free for your benefit. Somebody took the time to show me when I became a professional trader, and I'm taking the time to do the same thing, but to do it on a global basis, and that's the goal here. Okay? So, with that being said, today the market stance is the same as it's been for the last couple of days, except that gold is at the bottom of the heap, trading $1,220 and down about 38 basis points. The equities are all down except for the DAX. DAX is teetering on unchanged, only up 7.5 points. The big mover today is crude oil. Crude oil is pushing back into the MC point of control. The big balance in crude oil is at 53.87. I'll try to cover that a little bit today. I started to do my own flex levels for crude as opposed to having a volunteer do them, and so I can speak to it a little bit more. So I'll share that. The treasuries are down, and overall a mixed market. The market is down. The S&P futures are down just 4 points. So most everything is down less than 20 basis points this morning, except for gold. So we're teetering on the edge of break even. Not much going on overnight. The sentiment overall is not hasn't varied that much. This morning we got some numbers and releases from around the globe, key of which are housing prices in the UK being lower than expected, 0.1% versus 0.4% expected. In addition to that, we got Eurozone final GDP Q on Q for Q4 last year at 0.4 in line. And then in addition to that, um, the trade balance came out about a half hour ago, perfectly in line, 48.5 deficit. This is the widest deficit since March of 2012. That was in the month of January. And then our president here is tweeting about healthcare. The new healthcare legislation was released yesterday by the House, and it doesn't seem all that different than the old one, but there's probably going to be a lot of conversation around that. So keep an eye on your healthcare sector as well as pharma. This morning's tweet from Trump said, "I'm working on a new system where there will be competition in the drug industry. Pricing for the American people will come way down." So look at your pharma stocks for a potential hit there. Okay. Um, Other than that, let's have a look at what we expected yesterday. Actually, let's look at what we are expecting for the rest of the day. The only figure I have left for today is the 3 p.m. Eastern U.S. consumer credit, expecting 17.8 billion. And then I don't see any speakers. So a quiet day when it comes to the calendar. Yesterday's expectations. Here we go. We were opening out of range around the 2373 area. The primary expectation, again, this is where we came from the day before. Value was in line with the MC point of control, this black line, which represents the highest volume traded over the last few days. And so we were in clear balance on Friday. The market moved right back into balance. So on Monday morning, the normal auction process would be to retest that balance, to resume that balance, and to balance the overnight session. And then I expected selling into the session once we get back into the range, and then a rally on the close. So up is the mode. I was looking for a point to sell on the open. Any resistance to movement up to sell on the open, looking for this big rotation down. But that didn't quite take place. The secondary hypothesis was for the market to be what's called initiative on the open. Initiative action on the open means we're moving away from the most recent value, and the market is initiating a discovery process away from value, which means that you don't want to fade this early. Generally, initiative action means it's likely to run over anybody that stands in the way, especially early on. And then the idea is to find a bottom, for it to find a bottom around the 67 area or so, to put in a failed attempt at the low, and then look for this run up into the close back towards 2377 or so. This plan worked exactly as expected. The order flow also looked beautiful yesterday. I haven't queued up my book map for yesterday's trading to show you the turning points and how they played out. They seem to me to be somewhat obvious, but again, different eyes, different opinions. The third hypothesis was for a quick attempt down, and then strong responsive up, and looking for it to return into balance at the 2380.75 area. That was the tertiary idea. Here's what actually happened. Here's what actually happened. Early on, we got this small move up, but we didn't get back into the range. Remember, Hypo 1 was looking for it to get into the range, fail out of the range, get down into the 67 area, and then put in a higher low for a rally into the close, right? The secondary hypothesis was for a struggle on the open, but for it to push away in an initiative way, pull back, put in a low, higher low, and then this is the move we're trading for right here. And then look for this burst up. It happened earlier than expected. And then what we ended up doing is pushing to 78. 2378, which is where we expected it to go, this high volume node from the prior day. Okay, so this is hypo 2, and you could see it played out almost completely as planned at the turning points as planned. Of course, there's nothing I could do about the open, or I just don't think it's worth my money. I think it's not a very good bet for my way of trading to just jump in on the open without having an idea of what this opening swing will look like. The opening swing could have been right there at 2370.75 to 2373. Instead, I chose the bigger swing because it finally crossed the open all the way back up, and that's what I marked as the opening swing. And you could see us pulling back to the opening swing low right there for the low, and then pulling back to mid, and then higher low, failing through mid, consolidating at mid, and then bursting up. And then I was looking for a pullback into this entire region here. Long discussion in the S5 chat room about this region, in that getting into this area for the long to the high would have required us to scale in as opposed to being all in, all out. Several plays here. The LVN taking place right at the IB high. Beneath it, the OS low. Beneath it is the open and the mid at the time. So there's plenty of confluence there. So that's how things played out. As far as what we got in the overnight, quiet session, 142,000 contracts traded, completely balanced here. High kurtosis on the profile, and what does that tell us? What does this high kurtosis mean? This is a normal distribution graph, right? This is what you saw in your statistics book. This is the value area, or the first standard deviation. That's your first sigma, uh, and it would be in this range that represents 68, a little over 68% of the data set, and that's what we humans call normal behavior, normal prices. And what happens with high kurtosis is the market then the data set gets really sharp like that, and the data set is then very concentrated, and so the value area gets really tight. And what you have here in the sense of the market, what the market's doing as far as prices and volume, and that's why I use volume profiling to describe this action. What's happening here is you have a strong windup. Think of it in terms of traders, think of it as a whole bunch of people committing into trades in a very, very short range, which means that once it moves away, it's likely to dissipate that energy. In other words, people having to cover their shorts or cover their longs um, uh, in a very quick with a very quick move away from price, right? Because it's clearly the range is clearly defined. So that's what I'm looking for this morning. It is Tuesday, the most traditionally the most volatile day of the week. So I'm looking for a move away from here on the open. The overall um, the overall inventory slightly short. So you can see from yesterday's close to the current trading price, the price inventory short. The volume inventory, or the delta inventory, is actually even to slightly long. So you can see a little more dissonance there. I'm expecting that I'm expecting the open to be an open auction, but I'm expecting a move away from here fairly quickly on once we get going. Let me go over, actually, before I do the hypotheses, let me look over crude as I promised. So crude, this is a 60-minute chart, and you could see in crude that you know, looking at where it's been since September, it's been in this just awful range. It's been trading the same range for a long time. That's what we have in crude. So it's not going anywhere. It's not accomplishing anything just yet. The key point of control in crude is at 53.64, but the most recent point of control, actually, let me pull up my flex chart for this. This is the ES flex chart. Where's my crude flex chart? This is the crude flex chart. So you can see this is on a weekly basis. Let's switch to day. Let's switch to day here. Okay. So this is just a clean chart that I do the flex levels off of. And you can see where we've been. I mean, since the 1st of December, we've been in this, and this is pit session only, okay? You can see that we've been hopping around, a lot of different gaps and things, and we're trading inside of last week's range still. The week last week's low is at 52.57. Last week's high is 54. 44. I'm actually in the process of doing a weekly study to see what the real range is, or the normal range is. But so far, we're trading in this old gap zone that has not been closed, and we just closed it this morning. The gap zone goes to 53.72, and that's where we're trading right now. And we're moving back towards the balance that we've had since December. So the key target above, or the magnet above, is 53.87. The magnet for since August of 2010 has been 54.27. And so what you have here in crude is a market that is completely imbalanced. I mean, it may be up 1% or 2 tomorrow, maybe down 1.5% the day after that, but overall, crude is not going anywhere. It is a day trader's paradise right now, an investor's nightmare, since you're just sitting in these prices. Of course, unless you're trading some sort of a strangle or something using options, it really hasn't gone anywhere for a while. Let's shift back to the ES this morning. The market's opening just below the close of yesterday. We're opening below the key low volume node. There's plenty. Notice how this low volume node was created. It was beautifully created. Uh, just the price action, cutting off, pulling back and cutting off at the IB, the selling cutting off at the IB, leaving us with a low volume node. This area here, this price here at 23.73.75 is now key. It's in confluence with the prior low at 74 and a quarter. This area is expected to provide initial resistance. This morning, I'm expecting an open auction. I'm expecting it to push up towards that 74. I'm expecting it to fail early, have a large movement down, attempt lower, and then look to push back up into the upper range and close near yesterday's high. This is the most likely action for today. So open auction, test higher, hit that resistance early on, test the other side, because I'm expecting it to stay in balance inside of this gap zone. There's a gap zone here. See that gray area? That's a gap zone from back here. That's the gap zone from back here, and we're stuck in it. I'm expecting it to retest the range here and then push up on the close. That's the initial plan. Secondary plan: if it's not able to find buyers, open auction, push up higher, put in a failed attempt at the high, extend down, pull back, and then start to move down. And then the target in that situation, if it continues, would be 62.75. That would be the buyers giving up in the short term on the product. And again, keep an eye on your pharma and healthcare stocks today with the news coming out of the U.S. Congress yesterday. That could fuel the move down. Remember, healthcare is one of the key sectors of the S&P. I think it's around 19% or something of the index. So those are the two key hypotheses. The tertiary hypothesis is for it to test down early, look for buyers, find buyers, push through to 74, pull back, and then start to move back into balance, into the upper balance, and finish up higher. That would be the responsive plan that brings us back into the balance that we've had from way back here. Those are your three plans. Hopefully you've got something to work with here, and hopefully you've prepared your plan beforehand and are just comparing notes at this point. Good luck today, and sorry this one took long, but there was a lot to explain here. Good luck. Take care.